Hey everyone, welcome back to Corporate Dakota. Today, IRHOU just filed a Form 8 cake announcing an updated investor presentation for their business combination, and I am seeing one update that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is showing us a new presentation for their merger. And there is a critical update about their voting rights preparation that investors need to see. Alright, let's break down what Horse Acquisition II Corp, or IRHOU, is telling us. This is a company that is basically a placeholder, a shell company created to buy another company. They had their initial public offering back in late 2025, raising a good chunk of money, around $200 to $230 million. Now, they are in the process of merging with a company called Electra Vehicles, which sounds like it is focused on battery technology for electric vehicles and energy storage. This filing is essentially an update, attaching a new investor presentation that they'll be using to talk to potential investors and shareholders about this merger. Now, looking at the details here, IRHOU is structured with units, ordinary shares, and rights. Each unit is made up of one ordinary share and one right. The ordinary shares are what you typically think of as stock, and the rights are additional entitlements in this context. Each right gives the holder the ability to receive a fraction of an ordinary share, specifically 1/10 of a share. This structure is common for special purpose acquisition companies, or SPACs, as they are often called. It gives them flexibility as they search for a target company to merge with. The core of this filing, item 7.01, is all about Regulation FD, which stands for Fair Disclosure. This means that when a company releases material information publicly, they have to make sure everyone gets that information at the same time. They are attaching an investor presentation that they are using in connection with their business combination with Electra Vehicles. This presentation is their way of updating everyone on the progress and details of this upcoming merger. Electra Vehicles, the company they are merging with, is focused on artificial intelligence for battery performance, which is a pretty hot area right now with the growth of EVs. So this is not just a casual update, they are formally filing this information with the Securities and Exchange Commission, or SEC, the government body that oversees public companies. They are saying that this investor presentation contains important information about the merger. They also mention they are not obligated to update this information constantly, but they might do so if their management feels it is needed. Any updates would be through official filings or public announcements. This next part is crucial for shareholders. The deal, the business combination, will eventually be put to a vote by IRHOU shareholders. To get to that vote, they are preparing a registration statement on Form S-4, which is a big document that includes a preliminary proxy statement and prospectus. Think of this as the official package of information that details everything shareholders need to know before they vote. This will include details about both IRHOU and Electra Vehicles and the terms of the merger. They also flag something important about who might be influencing this vote. The directors and executive officers of both IRHOU and Electra, along with other management and employees, could be seen as participants in soliciting votes. This means their actions and communications regarding the merger need to be carefully monitored and disclosed, as they might have a vested interest in the outcome. Information about these individuals and their interests will be detailed in that registration statement and proxy statement. Now, this is a standard but very important section in any SEC filing. They are including statements that are not based on past facts but are about future expectations. These are called forward-looking statements. They use phrases like believe, may, will, estimate, and anticipate to talk about what they expect to happen. They are talking about the anticipated benefits of the merger, Electra's projected future performance, changes in the market for Electra's technology, their business performance, how they plan to use money for the combination, and the expected value of IRHOU after the merger. They even mention potential challenges like not meeting minimum cash requirements or issues with listing their stock on the Nasdaq. This section is essentially a giant disclaimer. They are warning that these future predictions are based on assumptions and current expectations. They are not guarantees of actual performance. Many things could happen that are outside their control, and actual results could be very different from what they are predicting. They point to already filed documents like their 10-K from February 2026 for more detailed risks. And they will provide even more in the upcoming registration statement and proxy statement. This part is a legal notice. This filing itself is not an offer to sell or buy any securities. nor is it asking for your vote or approval. It is just providing information. They are stating that any official offering of securities will be done through a proper prospectus that meets SEC requirements. Finally, we get to the exhibits. This is where they list the actual documents they are filing as part of this report. Exhibit 99.1 is the investor presentation itself, and Exhibit 99.2 is the press release announcing it. Then there is Exhibit 104, which is an interactive data file for the cover page, formatted in something called Inline XBRL. This is a standard way to make financial data more accessible for analysis. The little footnote about omitted exhibits is pretty standard, meaning they have supporting documents that they will provide to the CAC if requested. Now, let's look at the bigger picture here. IRHOU is a SPAC, and like many SPACs, their main purpose is to facilitate a merger. The key takeaway from this filing is that they are actively moving forward with their business combination with Electra Vehicles and have released an updated investor presentation. This presentation is designed to get shareholders comfortable with the deal, hopefully leading to a successful vote. What is interesting here is the structure of the company and its securities, the units, shares, and rights. It is a bit complex for the average investor. The rights component entitling holders to a fraction of a share often adds a layer of complexity and can be a point of dilution or value adjustment post. Merger, for instance, if a company had issued 100 million rights and each right converts into 1/10 of a share, that could represent an additional 10 million shares potentially coming into existence. The core story is about the merger's progress. They are providing updated materials to potential investors and shareholders. We don't see any specific financial tables in this particular filing because it is primarily an announcement about an investor presentation. However, the context clues from the research provided tell us that IRHOU had its IPO in late 2025. The stock price has been trading around the $10 mark, which is typical for SPAC units after their IPO. Institutional holders like MHAP International and LMR Partners hold significant stakes, suggesting some level of institutional confidence, or at least strategic interest. The biggest risk for any SPAC is failing to complete a merger. If they don't get enough shareholder approval or meet certain financial conditions, the deal can fall apart. Historically, many SPACs that merge with companies in nascent or speculative industries like emerging battery tech can see significant stock price declines post-merger if the projected growth doesn't materialize. A comparable would be many SPACs that merged in 2020 and 2021. For example, in the year following their mergers, many SPACs with market caps under $500 million saw declines of 70 to 90% from their peak. It is a stark reminder of the speculative nature of these deals. My biggest concern for IRHOU at this stage, without seeing Electra's detailed financials, is whether the market will embrace Electra's technology and business prospects. The forward-looking statement section highlights the numerous uncertainties and risks involved. A successful merger is just the first hurdle. The real challenge is for Electra to deliver on its promises and for the combined entity to become a sustainable, profitable business. The number of redemptions by IRHOU. Public shareholders will be a key indicator of investor sentiment leading up to the vote. High redemptions can signal a lack of confidence and reduce the cash available for the combined company. What I'm actually looking for is the full financial picture of Electra Vehicles when it becomes available in the S-4 filing. That will give us the hard numbers to assess the true value and viability of this merger. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.